Hello, everyone. Mo Zulfikar here with another episode of 5 Minute Show, where I break down financial market concepts in 5 minutes or less. Today, we need to talk about something happening in Japan and something that has a potential to shake the global markets. Remember August of 2024, when out of nowhere, markets panicked because Japan's, interest rate went up, and suddenly the whole world acted like the sky was falling. Well, something like that is happening now, and I'm going to try to break it down. You see, the Japanese government bond yields have been rising. Think of yields as, the interest rate investors demand when they lend money to the government of Japan. Here's the thing. Normally, Japan's interest rate move barely. They're famous for being super low. Again, basically like sleeping on the couch for decades. But now, yields are waking up. And a small move in Japan's bond market can cause big problems globally. And you might be wondering, why is that? It's because, Japan plays a huge role in the global finance. Japan is the biggest holder of US debt. It's not China, it's Japan. Japanese investors put money everywhere, US stocks, European bonds, emerging markets, and so on. And people have ability to borrow a lot of money from Japan, and that thing is called the yen carry trade. And I'll come back to it in a little bit. But first, let's go back to August of 2024. It was interesting time. One morning, the whole world woke up and suddenly everyone on CNBC, Bloomberg, any financial media was asking for, we need emergency, rate cut. Something is breaking in Japan. We need, there's a wiring issue and so on. And why was that? It was because literally a small move from 0.1% to 0.25% between March and July of 2024 triggered this, call it the unwind of the yen carry trade. Traders were rushing for the exit, and you saw wild moves across the board. For example, the S&P 500 between August 1st and August 5th of 2024 dropped 8%. August 3rd and 4th were the weekend, and imagine if the market was still panicking, the damage would have been a lot more. And in my opinion, it was one of those moments that showed the hand of the market. A tiny spark in Japan literally lit a fire everywhere else. So now, when the yield on Japanese bonds are rising, could the same thing happen again? Now, before we go into any details, it's important we talk a little bit about the yen carry trade. The yen carry trade is very simple. It's, you borrow money in Japan at a low interest rate, convert, say, for example, yen to the dollar, invest that money in higher yield assets. Think about US stocks, bonds, emerging markets, wherever. But here's the thing. It only works when interest rates in Japan are low because, you can borrow money. But interest rates are not staying low for now. What do you think happens? Can traders get punched in the face and forced to unwind? And we know when markets start to unwind, they unwind fast. Yen carry trade is not a small trade. By some estimates, it's up to a trillion or a little bit more than that. But there are estimates for even higher. So it's not a small sum of money that we're talking about here. And mind you, this is all happening as the Bank of Japan isn't really doing much. The bond market is speaking, and bond market actually, decides what kind of interest rates are going to be. Interest rates starting to look like they're going to be higher in Japan, and the carry trade, which is massive. Again, I can't stress this enough. The carry trade, which is massive, could be questioned. And now Something that a lot of people don't talk about, even on social media, you'll hear all about how, China owns so much debt, but it's actually Japan that holds that has the biggest U.S. Treasury holdings. Now you have to question if Japanese yields are rising. What are the chances that investors in Japan or investors, you know, they think about something else. They think about why would we buy bonds somewhere else when we can buy local bonds? And when that sentiment started to grow, could there be a chance that there is some selling of U.S. Treasuries and buying of U.S. bonds? Again, if the biggest buyers, start to sell U.S. Treasuries, what do you think happens to the yields here? Yields go up very quickly. I mean, there is, again, let me make it very clear. There is no indication of, the Bank of Japan or the government of Japan coming out and saying, we're going to sell our US holdings. They haven't said that or anything of that sort. But could that happen? That is the big question. In case it happens, US yields shoot higher. And when US yields start to shoot higher, we know stocks can get hurt, dollar moves, and risk everywhere across the board increases. And this is why I think it's important that we pay attention to what's happening in the Japanese bond yields. It's a number that's currently being ignored. People are brushing it off lightly at the moment, but it could create a lot of problems because it creates a lot of wiring problem in the global financial system and really, really can hurt in, very quickly. We saw an episode of that in August of 2024. If you don't believe what I'm saying, just go look at the chart. As in, again, in matter of 3 days, S&P 500 dropped 8%, and it was panic, and that was S&P 500. There were other effects across the board as well. So here's what I want you to think about, or call it some food for thought. If Japanese yields pressure the yen carry trade, do we get another event like August 2024? There is a possibility of it. And if Japan, the biggest holder of US debt, starts selling US treasuries, what does that do to the global market? Remember, the U.S. Treasuries are essentially seen as like, the gravitational force in the global financial system. If they start to get impacted, what happens to the overall global financial system? That's it for today, but let me know your thoughts in the comment section below. Make sure you like the video, subscribe to the channel, and go to zulfikarresearch.com. While you're there, check out the Trade Ideas page. I am working on something exciting, and I will announce it soon. I'll be back soon. See you later.